JJ the CPA here. Hope you're doing well. So I'm recording from my Zoom. I'm going to improve my camera and my microphone from the Zoom camera that I have now, rest assured. But I wanted to come on quickly. I'm going to try and let you know kind of where things stand on the PPP tax adjustment for employers. Also, I'm going to give you a little taste because I'm getting ready to go to my PowerPoint here of the Zoom seminars that I'm now doing. Yes, shameless plug that I'm now doing Zoom seminars. There's a link in the body of this video to my website where you can check out the 3 different kind of seminars that I am putting together coming up. So let me share my screen with you. And what we're looking at here is getting ready for my seminar that I'm doing tomorrow. I'm not going to put this in presentation mode, but I'm doing a tax seminar, tax strategies seminar on December 13th. Hopefully you're making it or made it. Nonetheless, part of that I am going through, and I've got a number of slides talking about the tax effect. We know that the IRS's position is basically this: you got tax-free income, therefore any expenses related to that, you're not going to be able to deduct. I've got a number of videos that talk about that, a playlist called PPP Taxed, ? Will Congress act? Well, about 75% of those in the House and Senate have indicated publicly that they don't feel the IRS got it right because the intent was this would have no tax effect. The ranking members in the Senate have indicated that they felt the intent of Congress was for them to have no tax effect. So stay tuned. There's stimulus that is coming about. We'll see. And it does seem that a popular provision in that upcoming stimulus will be a clearer indication from Congress, hopefully crystal clear, that will override the IRS. Now, here's my JJ the CPA reasoning. The IRS position is not consistent with itself, though this part is in the seminar that I'm doing tomorrow, just a very small portion of it. Those that paid good money to come to the seminar, it'll be 2 hours plus an hour of questioning, not giving away that much here, but it's also going to give you a taste that when I'm doing these Zoom seminars, how much more detailed they are going to be than what I'm putting on YouTube. I'm really only able to put about 25% of the type of information and advisement that I'm giving to my clients because it's just meant to be for everyone. When I'm doing a Zoom meeting, I can limit the audience, if you will, and then ensure that the audience that's attending the Zoom webinar has all the documentation that they need, and I can give a full and encompassing amount of information. So check it out. So the CARES Act indicates the cancellation of debt shall be excluded from gross income. That's what it specifically states in section 1105I of the CARES Act. It does not state that it's tax-free income. The CARES Act establishes this is a loan. The CARES Act required the borrower to spend it specifically and within 8 weeks initially. It wasn't until June that there was the 24-week provision to be able to spend the money. Now, the CARES Act stated that if the borrower spent it properly on the covered expenses only, with at least 75% originally, in June it became 60%, on payroll costs, the borrower would not have to pay back the loan, and it would be forgiven, which means the PPP loan would be canceled. So back to the top, the PPP loan canceled shall be excluded from gross income because all those provisions were followed. So let's be clear here. The IRS is saying, hey, it's tax-free income, therefore any expenses related to tax-free income, you're not going to be able to deduct. However, when income is deemed tax-free, it is specifically stated as such, typically in the tax law, like from the get-go, it's tax-free income. When a loan is canceled and is excluded from gross income, it becomes tax-free at that time. While proceeds of the PPP loan were being spent, used, and expensed, it was a loan at that time, meaning when we got the PPP and we were using it, we were not using tax-free dollars. We were spending a loan. The proceeds were not being spent from tax-free money and therefore should not be traced as such. If the proceeds were not spent properly, including not enough on payroll, right, the loan would not be forgiven in whole or in part with the threat, I see a typo there, with a threat of criminal prosecution using it improperly. So what is there? I'm going to fix that. So what we're getting there is that by following the government's orders properly, the provisions of the CARES Act, the borrower achieves forgiveness to the extent it was used for covered expenses with a minimum of now 60% on payroll costs. Now, with that being said, here's my conclusion, okay, that unless Congress overrides the IRS position, the tax adjustment shall be made and in 2020. However, okay, here's my reasoning why it should not yield a tax adjustment for employers. We know for the self-employed, because the PPP loan was based on net income for the self-employment, it is not considered gross income. Therefore, the self-employed, Schedule C, Schedule F filer, don't have to include an income, no tax adjustment because it was based on net income. It's not a reduction of expenses. So let's get to everybody else. Let's get to the employers. So hear me on this in conclusion. If the taxpayer received the loan, okay, that's key. The loan was spent. The loan was forgiven and canceled because the proceeds were used as required to achieve forgiveness. Right? That's not tax-free income. Had the loan not been forgiven and canceled, any proceeds would be tax deductible like any other proceeds spent from a loan. If you don't file for forgiveness, you don't achieve forgiveness, it clearly is indicated that you get to tax deduct the monies, the proceeds from the PPP loan. Congress stated in the CARES Act, which is the law, that any cancellation of debt from the Paycheck Protection Program shall be exempt from gross income. Congress did not state the proceeds from PPP are tax-free. The proceeds were not deemed tax-free unless not used properly. The proceeds were a loan. If canceled, it is exempt from gross income. Had the funds been deemed tax-free from the date of disbursement, the IRS's position would be consistent with the other provisions of the tax law. However, because it is not tax-free income received, the proceeds of the loan should be tax deductible to the extent they were used on qualifying tax deductions. Now, I will tell you this, historically, what happens when debt gets canceled is that there are certain tax attributes that are affected. I'm not going to go through each one of these, but basically what the IRS has indicated, hey, if you have debt canceled, then you're going to have to reduce down. And this is in publication, IRS publication 4681, that ties into IRS Form 982, where the tax attributes are then taken into account. What's a tax attribute? A tax attribute is, okay, you get this debt forgiven and it's not included in gross income, then you, taxpayer, have to make these adjustments. Guess what? In those tax attributes that have to be adjusted, none of it is indicated to be expenses. It is carryover losses, passive losses, NOLs, and if debt was forgiven and it was used to buy an asset and there is remaining basis in the asset, it has to be reduced. All that says that there is tax attribute adjustments, but not expenses. There is no clawback. So I will say this, in publication 4681, it does state that if a taxpayer does not tax deduct the expenses from debt that is later forgiven, they don't have to include the debt forgiveness in income. But guess what? That is because they didn't tax deduct the expenses. None of that is the set of circumstances of the CARES Act. The CARES Act is, it's a loan, use it properly, it'll be forgiven, and it will be exempt from gross income. The provision in 4681 is saying, hey, listen, forget any of this. You got canceled debt. Okay, 4681, a provision of that says, you got canceled debt. If you don't deduct the expenses, you don't have to include it in gross income. Okay, This would be on debt that has to be included in gross income if it's canceled. This would be on debt that has no other provision that exempts it from gross income, that the IRS says that if you don't deduct the expenses, you don't have to include it in income. Okay, let me just be really super clear. The IRS is indicating, well, if you don't include it in income, okay, you don't get to include it in expenses. And it's a backwards way of saying, the IRS, well, if you don't deduct the expenses, well, then you don't have to include it in income. Guess what? None of that applies because Congress said in the CARES Act that if you get this money, you spend it properly, you get it forgiven, the forgiveness amount is exempt from gross income, period. It didn't indicate, well, because you spent it properly, you don't have to pay this back because it was tax-free to start with. It didn't say, hey, here's money, it's tax-free, and if you spend it right, okay, you don't have to pay it back. No, he said it's a loan. You don't pay it back, or scratch that. You don't use it properly, you're going to pay it back. You don't apply for forgiveness, you're going to have to pay it back. It's a loan, it's a loan, it's a loan. All day long, those loan proceeds are used for tax deductible expenses, should be able to get a tax deduction for it. Quite different from something being received that is deemed tax-free. Okay? It wasn't deemed tax-free and then became something that had a tax attribute that tied to tax-free income. This was a loan used properly, then is exempt from income. So there is no tracing here. It was a loan, it was used. There's expenses, they're tax deductible. If they're tax deductible, those covered expenses are tax deductible. They get to be tax deductible. If later the loan is exempt from income, it doesn't make that deemed tax-free income. It was debt that was canceled that is exempt from gross income. Now, I'll reiterate, if Congress does not override this, then you must make a tax adjustment, employers. You must reduce down your expenses, and you have to do it in 2020 according to Revenue Ruling 2020-27. All right, hey, thanks for tuning in. I'd love it if you'd subscribe. And then, hey, guess what? Go to the link in my website, scratch that. Go to the link in the body of this video. It takes you to my website. I got 3 seminars coming up. One is for PPP forgiveness for the self-employed. One's for PPP forgiveness for everybody else. We're going to need to do the PPP forgiveness application after the first of the year in terms of my clients. That's when we're getting it done. We've been waiting till the first of the year. We're going to go and get it done. The only reason to wait at this point after the first of the year would be to know, well, is there going to be blanket forgiveness? Well, in my opinion, there won't be. There will be ease in achieving forgiveness, but check it out. You'll always have to sign off on an amount of forgiveness that had to have been calculated properly. So we're still going to have to determine the amount of our PPP forgiveness. The only thing that may happen in a quote unquote blanket forgiveness is less documentation to be provided. So it may feel like it. I don't believe that it will. Nonetheless, regardless of the PPP tax adjustment, we need to go ahead after the first of the year, in my opinion, and get the PPP forgiveness application prepared and go ahead and get it submitted. The biggest reason why is that payments will start becoming due in April or May. So no reason to wait and then all of a sudden have payments coming to due, especially if you're going to have your PPP loan forgiven. Because if you don't have your final result from the SBA, even after you have put in application, if you still don't have the results, well, when you hit 12 months from the date of disbursement, you're going to have to start making payments. So this is why you're going to want to go ahead and get done your PPP forgiveness application after the first of the year. So join me in those 2 seminars. I have a link. You can go and sign up for them. It's automatic. I will send you a list of what documents to have during the PPP forgiveness seminars, one for self-employed, one for everybody else, the employers, so that during the seminar, you can complete your PPP forgiveness application. So I'll send you that checklist in advance of the seminar so that you can pull together what it is that you need. I will tell you this, I priced these very low. I looked around, there's other organizations most of them charging at least 3 to 10 times what I'm charging for these seminars. It's a way to help. I also have a monthly seminar that is now beginning in January, where basically I'm giving you the information that I'm giving my clients. I told you at the beginning of this video that the information that I'm putting on YouTube, because it's for everybody, it is totally public. It is about 25% of the information that I am providing to my clients. So this once a month, one time only seminar limited to 100 people will be something that I put into play. And I will share with you in a limited setting, in the sense that a controlled group with the documentation that's required, the things that I'm talking to my clients about: tax strategy, tax law, upcoming due dates. But beyond that, I'm also talking to my clients about their financial aspects, right? Knowing their numbers, the accounting, cash flow, some management issues, insurance, economic conditions, retirement, what to put aside, loans, banks, all the provisions that I'm dealing with my client. I've got this book back here. Whoops, pointed to the wrong one right here. JJ the CPA here. It's on Amazon.com. It's the top 60 questions of the last 27 years. Why is that important? You check out that book, okay? Of the 60 questions, okay, less than a fourth, I believe it's 14 of the questions that I include in that book are related to taxes. That gives you a sample. Keep pointing the wrong way. That gives you a sample of what's going to be in this monthly seminar. Is that it'll be probably, for sure, it'll always be a portion related to tax and how to save money, but all the other things that I'm talking to my clients about. All right. Hey, again, thanks for tuning in. Love it if you subscribe. And then don't you ever forget, you've never met a CPA quite like me. Have a great day.